Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, August 24th, 5:35 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. In tonight's video, I'm going to show you 4 buys that we did in-house today. 1, a new buy, and 3 of them adds to existing positions that are presented good risk to reward points to add to our current profits on them. Let's get right to it. State of the market. We're back to uptrend. So last week, with some leadership under question, falling under some key support, we went back to neutral. Then on Thursday, we had a gap down, closed at the top of the range, and we've had nothing but bullish action since then. Follow through on Friday, follow through on Monday. Nice tight consolidation today, but with great action by leaders. So we're back to bullish / uptrend on leadership, and also on the short term with multiple closes above the 21-day exponential moving average across the board for all indexes. The only blip on the screen is this little yellow arrow under medium term, as we can't get the small caps to break through their downtrending 50-day moving average. But we're, of course, as always, keeping an open mind. Leaders and small caps have been acting just fine. In fact, showing some outperformance since last Thursday. So if that continues, we'll get to green across the board. There's a lot of talk about seasonality, and we got the most bearish that we've been in a couple of months last week. But we don't stick to old, outdated feelings on the market. We've been like a tree in the breeze. If there's weakness, we're going to reflect that weakness. If there's strength, we're going to get back in, and that's what we've done over the last 4 days. So what just happened today? Risk on, leaders back in business. You'll note the G5. This is our in-house indicator. That's a composite of 5 growth ETFs that we use, and you can see it had a great day today, up 0.96%. S&P 500 just barely positive. So this shows the big divergence between what leaders did today and what the S&P did, as we saw some selling in some defensive sectors. Actually, we've had back-to-back days of selling in these sectors, namely staples, utilities, healthcare, and real estate. When those are down and more growthy sectors within the S&P are up, that's going to be reflected in good returns for leaders and mediocre returns for the S&P and the Dow. Also, as you can see, NASDAQ 100 up 1/3%, mid caps up over 1%, small caps up over 1%. So let's get to the charts here, and we're going to dive in to what's been going on. First, let's take a look at the team at Revere. Reach out to us at any time if you'd like information on active management that participates in uptrends and gets out of the way in downtrends. Dan is the CFA, president and majority partner. He can be reached at dan@revereasset.com. I'm the Chief Information Officer, Senior Portfolio Manager, and Minority Partner. You can reach out to me, don@revereasset.com, if you have any questions on what we're doing with our strategies on our portfolios. Muriel's our office manager. She also may be answering the phone if you call. Tim's our Chief of Short-Term Signals, and Hunter and Alex I work very closely with, generating on idea generation, entries and exits, and managing the portfolios, and we'd love to speak with you. So reach out to any of us or call 855 Real Wealth. That's 855-732-5932. Let's hit the charts now. We'll start off with the S&P 500. You can see very clearly so last Tuesday, we made a high. We had pullbacks on Wednesday, bounced off the 21. That's the green line there. Tuesday. Wednesday, we undercut, had a close below. Thursday, we gapped down, broke below this this former support area here. That acted as support around the end of July, the beginning of August, but it was just an undercut and a reversal. Let's take a look at that on a 30-minute chart. So let's actually go to a 60-minute chart to be more precise. So here's the 4372, 4373 area. We undercut it, filled this gap from 722, and that's it. That bounce, that was a logical place for a bounce. We did bounce, that put in the low, and we've had a fantastic recovery since then. Closed at the high that day, broke back above the 21 on Friday, followed through on Monday, and now a very tight consolidation day today. Tightest action I've seen in a while, only 13 points from low to high in the S&P 500 today, and leaders outperforming. That's exactly what we want to look for. How about the NASDAQ 100? Very same situation here. This was lagging. You can see the lack of relative strength. We peaked on 8.5. We talked about this on our podcast and on previous videos. Lagging relative strength over a week and a half. But that we put in the bottom on that on Thursday with the undercut of the 21. Closed right below the 21, but powered back through it on Friday. New highs on Monday. New highs again with a tight consolidation day today. Let's go to the Dow Jones Industrial Average. We go through all these indices at the top of each video that we do because 75% of the action in stocks is going to follow what's going on with the major indexes. It's a matter of taking a look at what's going on with the indexes, then checking what sectors are leading, and then picking the stocks, the leading stocks within those sectors. So here we had a breakout a week and a half ago in the Dow. Came back into the base but bounced right off the 50-day moving average. That was on Thursday, along with everything else. Bounced at the 50, reclaimed the 21 on Friday. Two more closes above the 21 over the last 2 days. Not quite at all-time highs yet. Lagging relative strength over the weekend, over the last week and a half to 2 weeks for the Dow. Now let's check mid caps, MDY. They had been outperforming small caps for a while, trending nicely above the 50 and the 21. Broke through it along with the pullback in the other indexes last week, but again, bottomed on Thursday. Nice day on Friday, back above the moving averages on Monday, and outperformance today, as I mentioned, up over 1%. You can see the increased relative strength over the last 3 sessions on the relative strength line. And finally, small caps, been a fly in the ointment for a while, unable to get above the 50-day moving average during the period over the last 3 weeks where all the other indexes were trending above. Failed back below the 21 late last week. In fact, closed below the 200 just one day. But last Wednesday was a close. Sorry, no, it was Thursday. They didn't have that good of a day on Thursday. It was mostly tech stocks leading. But Friday got back above the 200-day moving average with some strength, and then following through on Monday and Tuesday. But now we're into the downtrending 50-day moving average, the red line here. Let's break it down into the growth portion of the Russell 2000. You can see the relative strength line after lagging very badly for 2 weeks, acting very well over the last 3 days. Let's compare that to IWN, the value portion of it, also acting well over the last couple of days. So that just tells that both value and growth small cap stocks have been pacing the market. This has run into the downtrending 50-day moving average. So let's see what happens when we get in a little better situation if small caps and mid caps continue to outperform. This has mostly been led by oil and bank stocks over the last 3 days. Really, let's take a look here at XOP. This is oil producers, bottomed on Thursday and Friday. This corresponded with this 72 level. This was something Hunter pointed out to me late last week. 72 was the breakout level from back in February. When we pulled back in April, that same 72 area contained the pullback. We rallied off of there, and then that same 72 area held Thursday and Friday. We gapped up Monday, followed through on Tuesday. Let's see if this is the beginning of something in oil or not. It may be a situation where oil is popping because COVID numbers. I've read mixed reports on whether they're actually getting better or getting worse, but we'll go by the charts. The market always seems to be a step ahead of what's ever going on fundamentally. So that's XLP. Let's look at XLE, which is more of a mixed bag and is dominated by Chevron and Exxon. Back above the 200-day moving average. So 2 nice days to oil. And that leads me into one of the 4 buys that we did today. This being Devon. This is one of the nicest oil charts from a relative strength and just a structure standpoint. This is just a 25% deep flat base that it's been putting together, bottomed along with oil over the last Thursday and Friday, but look how much higher its low is compared to XOP that I showed, that 72 level. So let's take a look at this. Remember this in your mind. Now let's go back to XOP, and you can see here's that 72 level, which was January and April. Let's go back to Devon now. Draw the same line. We're significantly above that January breakout level and about in line with the prior pullback area. Actually, no, that was right in here, April, so we're above that too. So there's the relative strength, even though relative to the market, Devon hasn't been doing that well, but relative to other oils, certainly outperforming. We bought this today when it moved above the 50-day moving average. A couple of other oil charts that are doing okay. LNG, back above the 50-day moving average, and CHK. There aren't a lot of them, but these are really the top. Actually, CHK with this failed breakout not looking so good anymore. COP, I also got an alert on that today. So that's back above its 21. But if oil gets going, Devon is early out of the box and leading it. And we'll see where it goes. As always, we've got a tight stop in place. It should hold below Monday's low. Okay, 3 that we added to today. The first one is Upstart. We added some on Monday after this nice tight inside action here. This was a double inside day, and then it broke today. When it broke today above this 210 area, we added. So this is one of the most volatile stocks, but its ATR had been around 10% for a while. On these days, it's quieted down a little bit last week, Monday and Friday, expanded today. Let's see, 204 to 220. So still a pretty significant 16-point move, but closing at all-time highs. This is very clearly one of the leaders. You can see from the relative strength standpoint there. Next stock that we added to, Datadog. We had done multiple buys on this and then had to take some off late last week with this failed breakout. But when it broke back above the Friday, Monday area today, we added some of that back. Datadog, one of the leading stocks since its gap up on earnings, hasn't really followed through since then, but this is the case with a lot of leading stocks. We also added to the trade desk something we took our first buy in on Monday here. Actually closed closer to the bottom of the range today. Very light volume. No real volume has come in. The volume was started out early in the day fine, and it did have a little bit of a gap up, but we did add to it today as long as this holds Monday's low. And preferably today's low, that 21-day moving average is just curling over and going up. And if leading stocks are going to work, I would expect this one to go higher also. Let's take a look at a couple of other things that we own in the portfolio that are still acting well. Net. Quiet day today, 59% average volume, consolidating near all-time highs. NVIDIA. Nice tight inside day today. Inside day means that the low and the high were contained by the prior day's high and low. So very tight, forming a little, maybe we'll put in a little bit of a flag here before going higher. And Dexcom, something we added to yesterday, put in a nice day. Yesterday, nice tight low volume inside day. Nice action today, up about 0.5%. And showing some strength. That's going to wrap it. As always, I'd like to hear from you. I'm on Twitter at @DVandenbord. Email don@revereasset.com. The phone is 855-REAL-WEALTH. So wrapping up Tuesday, August 24th, this is Don Vandenbord telling it like it is. Thanks for listening and have a great day.